Yesterday we went through and calculated our earnings. And earnings are going to be the first step for doing all payroll. Today we're going to be working on our deductions. And in order to do our deductions, you need to have your book. Okay. Much easier to do this with the book. And you will find in chapter 12 on pages, finding my page numbers, 347 and 348, there are employee income tax withholding tables. And those tables you will never need to memorize. You will never need to know all of it. You just need to know how to use a tax table. A tax table will be provided. I don't. So what I want you to notice on page 347 is that it looks very similar to page 348, except the first word in the upper left-hand corner. One says single and one says married, and that's an important point that you need to know. What we need to realize is we're going to be going through and we're going to be determining our payroll taxes. Okay? Payroll taxes are based on the payroll of the business. Okay? And they're going to be calculated based on each individual employee's earnings. Okay? A business, an employer needs to withhold federal income taxes from an employee's earnings. They are withheld. The employer holds on to that funds. It becomes a liability to them, and you're going to have a federal income tax payable or employee income tax payable account where you are going to need to owe the government the earnings from each employee. We know how much to withhold from them by a W-4, and I know that we went through and Ruth talked about a W-4, which is also called your withholding allowance. The other thing that you need to realize that we're withholding is going to be Social Security tax and Medicare tax. When you combine those two together, it is known as FICA. So don't fill in any numbers yet. I want to make sure that you understand this. FICA is the Federal Insurance Contribution Acts, and provides for a federal system of old age, survivors, disability, and hospital insurance. When that is divided up, that's going to be your Social Security and Medicare. Social Security is known as the tax for old age survivorship and disability, and a tax for hospital insurance is called Medicare. What you're going to find is Social Security and Medicare are paid by both the employer and the employee. And in Chapter 12, we are only dealing with employee information. Chapter 13 is going to be where we deal with employers. So what does that mean? If you have to pay $70 for FICA, your employer has to pay $70 as well. There is a matching fund. So it doesn't just cost your employer your payroll. They actually have to pay additional monies into Social Security and Medicare because you are an employee. So it's a matching one. Social Security tax is based on your total earnings up until a maximum amount. Okay? The maximum amount is called a tax base. So what does that mean? Every year, Congress can go through and set the tax base and the tax rate for Social Security. Only an act of Congress can change that tax base and tax rate. For our purposes here in accounting, we're going to use a tax base of $87,000 and 6.2%. Okay, so what does that mean? Every year for your payroll, up until the point that you earn $87,000, you have to pay 6.2% of that into Social Security. The minute that you earn over $87,000, you don't have to pay anything into Social Security. So they're saying once you have exceeded this amount of money, you no longer need to contribute to Social Security. I will tell you, I have never reached my tax base. And maybe some of your parents have not exceeded the tax base, or maybe they have. But you're going to find for certain employees, if they do earn a lot of money from you and they're going to be an employee that could exceed that, When you get closer towards the end of the year, you have to calculate things differently because they no longer need to contribute to it. But that also means then the employer doesn't have to contribute to it. So when we are going through and doing payroll, it's always important that every given employee, when we calculate it, we know what their earnings are to date. Because their earnings to date are going to tell us if they have exceeded that tax base. So that is a concept that throws people off in this chapter. A tax base, again, only have to pay taxes if you have earned under $87,000. That is not really the tax base right now for our country. Does somebody want to look that up? What our current tax base is for Social Security? That might be worth a treat. I want to know the tax base and our percentage. I only have a few people that are interested in looking it up. Tax base for Social Security? Dale's got like the big form out. That's the hard one to read. 127,200. And what is our percentage? 6.2 still?
Yeah.
All right. Dale, you were trying. You just picked the wrong one to look at. So here you go. So 127,000. So again, the act of Congress is going to be what's going to change that. And an employer needs to be aware of where it's at because that's going to change how they calculate payroll. So when we take a look at our directions for Work Together 12-2, there's a really important line in here. This last sentence right here in the directions, it says, none of the employees have accumulated earnings greater than the tax base. So what does that mean? They expect you to understand what a tax base is, what I just explained. Again, for our book, though, we're going to use $87,000 as our maximum for the tax base, and then our tax percent is going to be 6.2%. So what we have to do is we have to calculate our deductions for our employees. So in order to do that, you first have to calculate their earnings, which is what we did yesterday in 12-1. Now today we're going to calculate our federal income tax withholding, Social Security, and our Medicare. Your federal income tax withholding is always going to be based on your tables, which is why I said you need to have your book, because those pink pages are going to give you your information. Social Security and Medicare is going to be based on a percent, and you can see that Social Security tax is 6.2 and Medicare tax is 1.45. So you should be able to look quickly and realize that your Social Security contribution should be greater than your Medicare, because Social Security is 6.2 and Medicare is 1.45. So that way it's always a quick glance to see if you maybe miscalculated or put a different number in on the calculator and hit it wrong. So it's just a good estimate from there. So